Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, continuing the week's theme of looking at certain altcoins, today it's Ada's turn, Cardano, and we're going to be digging our way through the count and talking about when we might see a low. We've been talking about that throughout the week. Maybe we've put in a bottom, but maybe we've got a little bit further to go. Now, I want to start by just clearing the count actually and just sharing some obvious things first, which I think might be helpful. So we're just going to clear the count. Now, what can you see clearly from the low of March 2020? I'd argue that very, very clearly we have a very attractive looking and clean impulse that channels pretty much perfectly, or close to, for something as volatile as the crypto market. We've gone from point to point to point to point to a median line in this channel, finishing 5 waves up. We move it to one side and look at it. It's a quite attractive and nice looking impulse. 5 waves, nice extended free. Okay, now obviously in log scale it looks different to how it looks in arithmetic scale. It looks like this. Alright, and it does not look as pretty, but when we channel the thing and we account for the skew in price, it looks very, very nice. So that's nice and simple and subdivides very cleanly. This, however, is the corrective element, and I've thrown so many counts on this over the last few months that I've basically just given up and just whatever the last one I did is the one I've kept, because this thing is so complicated in its structure. In fact, it's so complicated that me talking about it today could probably make it worse. But I'm going to talk about it anyway. So the point I'm making here is, after a 5-wave move up in an impulse, we get a 3-wave corrective move, right? 5 up, 3 back. This is 1, this will be 2, off of a new low. At primary degree, I have it 5 intermediate waves up, 3 intermediate waves back, ABC, WXY, WXYZ. You take the point, it's a complex series of zigzags, and it will complete eventually and we'll be off into a wave 3. Okay, so primary 1, primary 2, huge primary 3 which will dwarf primary 1 in scale. Okay, so big money to be made and accumulating near the lows if further lows come, in my opinion, and it's not financial advice, can only really be a good idea. Now, if we look at what we've done, having come up in 5 waves and come back, the first thing we've done really, we've got this long wick on the daily chart, and that brought us back to this cluster here around these highs. It brought us back to this high, and this little cluster here. Essentially, it's structural support, horizontal structural support. We came back and tested it. Okay. If we look at what we've retraced from a Fibonacci retracement point of view, we'll come off of log scale to do this, and we'll see how, once again, as we've seen in chain or link USD, chain link, we looked at earlier in the week, XRP we looked at, Solana we looked at, and we can see that once again we've come back pretty much just shy of the 89% retracement, which is this pinky purple line here that I use. Now, I use the 89 because it's a Fibonacci number. I prefer it over using the 90% retracement, but whenever I'm speaking in a more general terms, I'll say we've given up 90%. Well, we almost. So one more move down through it would mean that we've given up essentially over 90% of the market if we break through this and keep heading lower. So when I look at it like that and I see 5 waves up into a 1 and this move back into a 2, a 90% retracement just confirms to me that it is a wave 2. It's a deep, sharp, zigzaggy mess in this case, but it's a wave 2, which means a wave 3 is coming afterwards. So let's shift back into log. Now let's turn off that fib. So that's all well and good, and we can see how, if we come into the more recent price action here and have a look at the volume profile, we can see that this little region here gives us this little hump in the volume profile, and the highs appearing once again in the little gulf inside of it where there's no market acceptance, essentially is where we've basically found support. Okay, come just needling in to the peak of this little volume area here. Now off of the lows we can see how ever since we came up in the strong wave 3 where volume peaked into the 3 of the 3s where volume peaked, and then volume began to decline as we put in the 4th and 5th waves and continued to decline during this correction. So what we're really looking for as and when it comes is a 5 wave move off of the low supported by with some volume supporting it, a bullish shift in our momentum indicators. Now we want to get back into trending between neutral and overbought, and that will be a sign when we've got the price action that we are into our wave 3 and heading higher. The same with getting a back above the zero bound in the MACD and doing the same again, rather than sitting below it like we have for this extended period with very little momentum recorded above the zero bound. We're below it during all of this correction. We want to see the opposite occur like we saw back here with these big peaks and constant movement above the zero bound. We're going to get back in and we're going to have this bullish momentum, okay, and we're going to sustain that bullish momentum once we're in the wave 3, and long term it should peak above anything we've seen prior in the MACD, because we should be pushing out into the 3 at primary degree at that point. Now the unbalanced volume currently is showing no signs of bullish divergence near the current lows. The low is the low. We'll see if we make another low, if we start to pick up some divergence in the RSI, MACD or the unbalanced volume. Perhaps another low just to a slightly lower low would leave us in a position where we have that divergence clearly on the day time frame. It's not there yet. So the next thing I want to look at is on the weekly time frame. Let's just bring up the RSI again. Is we've done what I like to call a round trip. Now on the weekly time frame, going from overbought into oversold territory, I wouldn't express it as a prerequisite for the completion of a larger wave degree, but it's very normal. So if you're doing something at primary degree, like a 1 and a 2 we suspect here, going from overbought, extremely overbought in this case, over multiple months or years perhaps, into oversold on the weekly time frame is a pretty good sign that we're approaching the lows. We may have put in the bottom, but we are at least approaching the lows. And as I've been saying all week, I think those lows are imminent. They're within weeks of where we are now in terms of time frame, and it's possible that the final push down, if there is more to come, could be quite violent. You know, a capitulation move. But there's also a chance that we come down here on declining volume and we just eke out one more lower low and then we pop. Now we won't know until it happens. Crypto market can capitulate quite violently near the lows. After a period of consolidation, we saw this during this period here in 2018, and then this final push down to a low. Okay, then we had this rally, then we had another move to a low, and that final move was very violent. Now this is different price action from what we saw in Bitcoin, where we saw a much longer extended consolidation period before breaking down into December of 18, and then we didn't make a lower low. Hence why the count is in a different place. Either way, I feel like I'm rambling a bit now, so I've basically been putting it off, but let's come in and try and explain what I think is going on, and please give me some rope to work with here, because it's a mess and I'm just doing the best I possibly can with it. So, like I said, the move up into the high, no problem. 3 subdivides nicely, big extended 3, quite a short 5, but not a million miles away from the length of the 1. But when you get an extended 3 like this, a shorter 5 is perfectly normal. It will tend towards parity with the wave 1 in that circumstance, but only tend towards it. It doesn't have to be the same in scale. Okay, so we'll stay on the day time frame for the moment, I think. I'm sure we come down to 4 hour. Let's come down to the 4 hour. Okay, so, and what I'm going to do, just to accommodate ease of expressing and explaining this count, is I'm just going to shift the chart into line for a moment, because there's so much wickage, so to speak, around that it can get in the way. It's not too bad here on the 4 hour actually. We'll see what we can do here on the 4 hour. On the day time frame, you can see how the price data has these huge exposed wicks up and down either end of the body of the candle. But if we break the time frame down, break those bars, those candle downs into smaller segments, it's not so bad. Right, A, B, C. I see this as a 3-wave move. Minute degree into our first minor degree swing W. We then get a triangle for our X, and then we get a zigzag here for our Y. W, X, Y minor degree into our first W at intermediate degree, meaning that we've had our first double zigzag. Okay, at intermediate degree. Zigzag here, and what I think is a zigzag here. Okay. We then have our first X wave at intermediate degree, which is this 3-wave swing to here. And then we get another zigzag at minor degree, double zigzag at minor degree, where we get 5 down into an A, a B, and then 5 down here as a diagonal into a C. Now I know you're going to look at that wick and say, well Tom, that's a lower wick. I go, well, you know, look at it in line, and now it looks like a diag. So like I said, give me some rope. It's not, you go away and count it yourself, essentially, at the end of the day is all I'm going to say. A flat here for the X wave, and then we get another zigzag. Right, 5, 3 and 5 again. This is our Y at minor degree into our Y at intermediate degree. We then have another 3-wave swing here. We can count this as a zigzag, or we could count this as a flat. We do come back 90% in the B. If that's a 3 and that's a 3, we can count this as a 5. It's an extended C in a regular flat. Or you could just try and get 5 into here. So take your pick. Doesn't matter. This is the pivot. We come to here. This is our second X wave in what is a triple zigzag at intermediate degree. Finally, subdividing this bit a little bit because it's a little unclear. We either have bottomed with a final zigzag, and this would be A and B and C, rather than 5, or we've done 5 down. In an A, we're doing another double zigzag at minute degree into a minor B to do a minor C, which will be another zigzag, to get the completion of our triple zigzag in our wave 2 zigzag party. There you go, zigzags all day, all the time. Zigzags for a penny. And there you go. That's basically the best I can do. And it is just a bit of a mess. I guess you could say it channels okay. I mean, it's not the cleanest thing to look at, really. There's no pitchfork because there's no primary pivot which is going to contain all of this. You know, you're going to maybe if we take the W and the X here, maybe we can get something. I'm not sure we can. Maybe a shift. Maybe that's the best you're going to get. And it's kind of contained inside of here. Like bouncing between extremes, coming out all the way back to the bottom. I mean, you see what I mean? It's not neat. It's not a nice channeling simple ABC. It's not a nice extended, or measurable flat. It's just a series of zigzags going on and on and on until finally it ends. And it will end eventually, and when it does, it'll probably end quite violently and bounce even more violently in the opposite direction. So that's what we're waiting for now, really. And that is all I've got for you today. That is really basically it. We just it's a waiting game. We're going to see if we finally get this final move down. If we do, I will add to my bags, I think, on this one. If we do get another breakdown, because I think it's just a exceptional value, having come down basically 90%. And after receiving such a clear signal of 5 waves to a new high, this is the retracement. This is what we're waiting to buy. It's just we're in the middle of a very nasty shakeout, and I'm not sure everyone who's going to quit has quit yet. I'm not sure everyone who's going to sell has sold yet. And maybe it's just going to take one more nasty scare to really find the lows. But anyway, that basically concludes our coverage of altcoins for the week. I hope you've enjoyed it. If you're new to the channel, you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read of the tiers, and see all the benefits you get for doing so. I think that's going to wrap up our altcoin coverage for the week. I hope to get a video out sometime during the weekend for Bitcoin. But it's my daughter's birthday party tomorrow. She had a birthday earlier in the week and she's got a whole bunch of friends over tomorrow, so I'm honestly not sure if I'm going to manage it. If not, it will be early next week, Monday or Tuesday, okay? And then normal coverage next week will resume. Having gone through all of these altcoins, we'll be back to looking at the stock market, gold, silver, oil, and stuff, things like that as well. And of course, another live stream next week where, if you're a patron, you can put in the requests whenever you like, and we'll get round to it. Alright guys, take care of yourselves, all the best, I'll speak to you soon. Take care, bye bye.